Welcome to Module 5 of your training videos. In this video I want to talk about some more advanced ideas like money management and also give you some other tips to help you stay profitable in the long run. First of all, let's just talk about why you want to manage your money. When you trade Forex, there's no such thing as a trading system that wins 100% of the time. So if we manage our money correctly, we can ensure that we stay profitable. With a good money management system, you can actually win even with a trading system if you only won 25% of the time. So hopefully you're going to win more than that. But with this money management system I'm about to give you, you could win as little as 25% of your trades without ever losing any money. And it protects us from large drawdowns so that you don't end up losing a large money of your capital that you put in to trade Forex. So money management is important, and a good system to manage your money is a system I'm about to give you. We need two things with this money management system. We need a clearly defined percent risk level. That's an amount that we're willing to risk on any given trade, and we're going to define that number as a percentage of our account balance. We also need a method to calculate the correct trade size according to our stop loss according to that percent risk level. So in other words, we're going to vary our trade size using a clearly defined percent risk level. Now what your percent risk level will be is actually up to you. Some people say 1% is a good number to start with, and if you're just starting Forex, that's probably a good number to start with. As you gain more experience, you might increase that number to 2%, and if you're an experienced trader, some people even use 3%. But 1% is a good number to start with, 2% as you gain some experience. And let's move on here. We need to start by calculating a per pip value. So per pip value, the formula to calculate that is 1 pip with proper decimal placement divided by the currency exchange rate, and then we multiply that number by the amount. So that would be the amount that we're trading, either 10,000 for a mini lot or 100,000 for a full lot. So just to give you an example here, if it was the US dollar Japanese yen, we would go 0.01, 1 pip with proper decimal placement, times the currency exchange rate, 126.26, times the amount we're trading. If we were trading a full lot, it would be 100,000. So each pip in that case would be worth $7.92. Just a quick note here, if it's the US dollar on the left-hand side of the equation, or sorry, the right-hand side of the equation, like it would be with the Euro US dollar, then the per pip value is always constant. For a mini lot, it'll be $1, and for a full lot, it will be $10. And once we have a per pip value, we can calculate how much we are risking on a trade and then use that number to calculate how much we should trade. So let's just go through an example here. We enter a trade long on the Euro US dollar at 1.5020, and the system tells us that our initial stop loss should be set to 1.4995. So we are risking 1.5020 minus 1.4995 equals 25 pips on that trade. So with every lot we trade, we're risking 25 pips times $10. The per pip value equals $250 risk for every lot we trade. Continuing on with the example, with our per lot risk, we can then calculate a trade size. Assuming your account balance was $120,000 and $222, and your percent risk level is 2%, we can calculate that we're allowed to risk 120,222 times 0.02 equals 2404.44. So that's how much we could risk with a trade. We multiply our account balance times our percent risk to get our acceptable trade amount. And now that we have those two numbers, we had calculated that each lot we traded would be worth $250. So 2404 divided by 250, we're allowed to risk or allowed to trade 9.61 lots to remain within our acceptable risk level. So with our system, since we are teaching you to use multiples of 2 for the trades, you need to trade 2 lots or multiples of 2. So just going through from the example, we had 9.61 lots. If you could trade both full lots and mini lots, using the last example, you would trade 4 lots and 8 mini lots twice, so that you would end up trading 9.6 lots total. And if you couldn't trade mini lots, you would round that number down to 8 or 9. I would probably use 9, and then I would use 4 lots for my first lot and 5 lots for my second lot. So that would be, as I entered my first trade, it would be 4 lots. As I entered my second trade, it would be 5 lots. and that way I'm staying within my acceptable risk level by varying my trade size. Some other things you can do to stay profitable in the long run: start trading with the longer term charts when you begin, especially when you're starting out with these systems. Stick with the 1 hour charts or above. Trends on a longer term chart are more clearly defined, and you'll be risking less as you gain experience trading Forex. And I also recommend that you use a practice account until you are completely comfortable trading this system. You should know everything from how to calculate proper trade size to how to enter and complete a trade before you ever start using your own money. And use the money management rules we've given you in this video religiously. Don't ever use anything more or trade more than your acceptable risk level, and that will help you to ensure that you're always growing your account. And learn the currency pairs you trade well. This will help you avoid false signals. So in other words, if you start trading 2 currency pairs, stick with those until you're very good at determining the signals and knowing what to expect with those currency pairs. With most of them, you will find that they'll tend to trend one way and then the other. They'll tend to do it for certain amounts of time. You'll start to get an idea of when things are going to turn around. Of course, there's always other factors in there like news releases and stuff like that. But just learn on a few currency pairs when you're beginning out rather than trying to diversify your whole portfolio across 10 or 12 of them or something like that. By using money management and a few of these tips, you will help yourself to stay profitable right from your first trade on.